This video is for all the new traders out there that are basically afraid to pull the trigger. They've heard about trading, they've seen the videos, they've tried to teach themselves, and basically just don't know where to start. Trading is a very risky business, but you can make a lot of money trading, provided you have a sound strategy, and I wanted to make this video to teach you how to do just that. How to come up with your own strategy so that you can confidently enter and exit the financial markets or the stock market utilizing your own strategy and your own plan to not be dependent on tips and tricks or gurus or the latest hot news off the press. So I got started in trading about 30 years ago. This was long before the internet and email, and it was basically a very slow process. The financial news would be printed in the daily newspaper, and you would do your, or I would do my, my homework there, not knowing really how to proceed or how to repeat success, always looking for that one home run. Well, in order to be consistently profitable in trading, you have to be just that, consistent. So I wanted to introduce a concept called backtesting. Backtesting is a process by which you'll prove to yourself that you have a execution plan that will win over time. And how do you do that? So the first thing you're going to need is a charting software package, and preferably a charting software package that you can also trade from. Now I use NinjaTrader. This isn't a plug for NinjaTrader, but it's a simple program that you can download to your computer. It has a $12 a month data feed subscription that frankly gives me everything I need to trade to this day. My all-in cost minus funds deposited in my brokerage account is $12 a month, plus commissions to enter and exit trades, of course. If you want to use NinjaTrader, you can go online, just search for it. It'll prompt you to download the software, whether or not you've got a Windows or Apple-based computer. And once you get it set up and registered, it's pretty simple. Now, you don't have to deposit any funds with NinjaTrader. There's a simulation account that you can use while you learn. So it's pretty inexpensive. Once you've got all that done, what you're going to do is pull up a commodity on the chart. I would recommend for new traders to practice in the financial markets, whether it be 5-year, 10-year, or 30-year bonds. I trade primarily 30-year bonds, as one of my main commodities that I'm currently involved in, and frankly have been for several years. A popular symbol I would recommend is ZB or ZT. And once you have that up on your screen, you're going to want to backtest about a year's worth in time. And all you do is move the chart over on the bottom, back about a year. You'll see a bar on the right-hand side of your chart. We'll focus in on that bar as the first bar so that you can't see anything that's happening in the future. Now you're going to need a trading strategy. You may already have one, or maybe you don't. And if you don't, I'll give you an easy one right now to get started. It's an abbreviated version of the one that I use without a lot of the additional trade filters for, opportunities within that strategy when different things happen. We'll just keep it simple. I'll give you the basic premise of the program. So you're going to want to set up a couple of indicators on your chart. One's going to be a 3-period moving average, and one's going to be a 6-period moving average. and then the ADX indicator, which is a momentum indicator. Help you understand the trend, the current trend. I trade on a daily time frame. That works out very nicely for my lifestyle. I'm currently still, employed full time, so trading on a daily time frame allows me to be free of trying to track or stay plugged into the market during the day while I'm at work. As you can imagine, that would be a huge distraction. So I prefer to trade on the daily time frame. It's worked out very nicely for me over the years. What does that mean? You'll have to set your chart up as a daily chart, and the first thing you're going to want to do is switch it over real quick over to a weekly chart. You're going to be looking at the higher time frame weekly chart to establish the current trend, whether that commodity is bullish or bearish. And once you determine that, you'll do that by, are the last 2 or 3 weeks bars trending in an upwards trajectory or a downwards trajectory. That's the difference between bullish and bearish. Bullish being, a sentiment that the price is going to go up, and bearish being a sentiment that the price is going to go down. Once you've got that straight, switch back down to the daily time frame, and you can get started back testing. So what you'll do is, on that first bar, you'll look at the 3-period and 6-period moving averages and see where they're at in relationship to each other. The 3-period moving average moves faster than the 6. So what you're looking for is the 3-period to cross over the 6-period. And when it does, in the direction of the higher time frame, of course, meaning that on the weekly chart, if the trend is up, then you'll be looking for trade setups that are also going up. Now, this is a very beginner-friendly process, so don't overcomplicate it. As you get better, you can try other things, but stick with this in the beginning. If the weekly time frame is trending up, then on the daily time frame, you're looking for a cross of the 6-period moving average by the 3-period moving average in an upwards direction, so it crossing up and over. And then you'll look for, a value, an ADX value of 20 to 22 on that, greater than 20 or 22 on that momentum indicator that I mentioned previously, essentially to confirm that bias. So very, very, very quick recap. Weekly chart is on an upwards trajectory. You're looking for the 3-period EMA to cross up over the 6 with an ADX value greater than 20. If that happens, then that's the trade setup. And if you had real money in the market, or real money in your account, you would place a trade. You're going to want to log all of these events in a trading log. It's very simple. Just get a notebook, or you can use an Excel spreadsheet like I do. Set up a column with the date, set up a column with the commodity, set up a column that says you're going long or short, a column for your entry price, a column for your profit target, and a column for your stop loss. And then I'd put a notes column on the right-hand side just to jot down a couple of notes on the setup and my thought process around getting in the trade. And then you'll advance the chart a bar at a time, or a day at a time, until your profit target is hit or your stop loss is hit. And it's really that simple. And you'll repeat that process over a year's worth of time. And what this will do is give you essentially a year's worth of experience testing that trading strategy that I just outlined to you against that commodity. And you can do it with other commodities as well. The process typically takes about 2 to 3 hours. And what you'll find is that different commodities react differently or have a slightly different price structure. So the backtesting process is designed to help you zero in on commodities that have a normal price structure, let's say. All of that changes, of course, when the markets get very volatile. But for a standard practice, you're looking for consistency and price structure as a beginner while you learn. ZB and ZT are very good for beginners. They're also very good for advanced traders. They're currently ones that I still use to this day. Now, the process of placing a trade involves identifying where your entry price is, and of course your profit target and your stop loss. Now, as important it is to identify your entry price, it's also just as important, if not more important, to identify your stop loss. Most new traders, when they get started, are focused on trying to find that grand slam win, or focused on how much money they think they're going to make in a particular trade, but aren't focused on managing the risk. And managing your risk over time is what will determine whether or not you are a profitable trader or one that just continually has to deposit more money into their account while they go down their learning path. You don't want to be that guy. Now, what I typically look for is a 1-to-1 profit risk to reward ratio. And what that means is that for every dollar that I'm going to, or that I hope to win in a trade, I'm willing to risk $1. And that may sound like a zero-sum game, and it is on an individual trade basis, but you're not a one-and-done trader. You're going to become a long-term trader. So you're concerned with the success of your trading strategy over a block of trades. So what I mean by that is if over the course of a year of your backtesting you determine that you've got 30 viable trading strategies that you would have entered, what you're looking for is a plus 80% win-to-loss ratio. What I found is that it typically, with this program, typically runs about between 85 to 95%. So, 2 out of 10 or 1 out of 10, let's just say 2, round up. 2 out of 10 trades are going to be losers. So if you're risking $1 to win $1, and over 10 trades, or over the 30 trades we mentioned before, you lost 3 trades, then you can see how you can make money. It's a simple math problem. When you trade like this, you're trading free of the feeling of gambling. And to be honest with you, for me, trading is a very mechanical process that's somewhat boring. Don't get your kicks in the financial markets. Get your kicks somewhere else. Thrills in the financial market will just make you broke. Now, when I got started trading, I invested some money with a guru, and bought a trading plan. This is going back about 8 years ago, and it's the one I still use today. However, in that program that I bought, there wasn't any information on managing your emotions. And managing your emotions, learning to manage your emotions, is really the secret sauce that will take you from a consistently losing trader to one who consistently wins. If you've ever traded before, you may have experienced some of these emotions. You've gotten into a trade, it starts to go up, and it's exhilarating. You're making money. And if you're fortunate enough to win a couple of trades early on, you may formulate in your mind that for you, trading is easy. You don't understand why it's so hard for everyone else. You've got it figured out. You're going to make $1 million overnight. And then you lose. I think it would be better for unfortunately, I think it would be better for new traders to lose a few in the beginning, just so that they'll work on the importance of learning how to manage their emotions. Another trait that I see that is a serious detriment to new traders is, they've gotten into a trade. Let's say they think the price is going to go up, and it starts to go down, starts to move against them. Now, maybe not 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 a lot. It's gone down enough to where they're in the negative, and of course it's not enough for them to get out of the trade. They begin to start becoming hopeful that, well, it'll just turn around and it's going to go up. Everything that I saw, or everything that someone told me, it's got to be right. So it's a temporary setback, and then it continues to go down, and then it goes down some more, and then you're no longer excited at the opportunity of making money. You're just hopeful that the trade is going to break even. So if the price just comes back enough to where I got in, I'll get out. And sometimes it does. My experience has told me that most times it doesn't. And that's really the importance of that stop loss, is so that when you get into a trade, if you have decided on the spot where you're going to exit, meaning that you've lost some money on that trade, and you've identified a point where it makes sense to just close the trade. Make it automatic. Set the stop loss. Make it automatic. Don't allow yourself to get caught up into the emotional roller coaster of hoping it's just going to come back. There's always another trade. Nothing's guaranteed in the markets. Essentially, the markets, trading is a coin toss. But by backtesting your program and fine-tuning your indicators to get that 90% win rate over time, what you're hoping for, or what you're working towards, is a coin toss with an edge. Much like the casinos in Vegas have. The house has an edge. It's a slight edge, but it's an edge nonetheless. And it's allowed them to build those beautiful casinos that you've all seen if you've gone to Las Vegas or Atlantic City. And that's really what you're looking for, is a coin toss with an edge. The other thing that backtesting does for you is it allows you to remove all of the noise that's out there. Prevents you from being influenced from the latest financial news, a stock tip, or a tip that you may hear at work or from a buddy. It also allows you to stop that search for the trade that you're going to try to place today. If you focus on one or two commodities and learn how those commodities flow, and you'll see that in your backtesting, and you'll see the results of the backtesting that you've done, and you'll use it to compare against when the next trading setup appears. Once you become a funded trader, once you deposit some money in your account and you're looking to trade live, you can use that data that you plotted while backtesting to review the current potential trade setup that you're looking at, and that will allow you to confidently decide, is it a viable trade setup or not, based on the backtesting results that I've seen. And then it's a mechanical process. You'll win some and you'll lose some. What I found in doing this process is that you lose far fewer than you win, and that's really how you make money. You're not looking for a grand slam where you knock one trade out of the park. You're looking to make money on a majority of your trades over time, and that'll constantly allow your trading account size to grow. And as you make more money, you can increase your position size a little bit and make even more money. An example of that would be when I started out. I obviously started out trading one lot or one commodities contract, and did that for about the first 10 10 months to a year, and then have since graduated, and I'm up to 5 contracts in ZB. So when you're looking at ZB and you're backtesting that, wait a minute. One thing I didn't cover is, how do you determine your profit target? I use an indicator that plots the average true range of that particular commodity. You could also use support and resistance, as a beginner while you're learning. And where I was going with this is that using the average true range indicator for a profit target in ZB, an average win is about $900. Of course, on a 1-to-1 risk to reward ratio, an average loss is $900 as well. So at 5 contracts, the potential profit is around $4,500. And if you're winning 8 out of 10 trades, you can see how that would add up pretty quickly with 1 contract in the beginning. So 30 trades over a year is potentially, $27,000 if you incurred 3 losses. 5 contracts where I'm at right now, quite a bit more than that. It's actually getting to the point where the amount is surpassing what I make in my regular job. And then I'm going to have a decision to make. Do I keep trading and working, or do I quit and become a full-time trader? I don't know. I enjoy what I'm doing, so maybe I'll do both. That's another video when that time comes. So we'll celebrate that win together, and then maybe you guys can help me decide, what I'm going to do. We'll see. So just to quickly recap, if you're a new trader, please don't jump right in with your hard-earned money. Learn to backtest. Make that your second hobby. Once you've backtested a particular commodity, 5, 6, 7, 8, 9, 10 times, you'll have about 20 hours invested in that, gained a tremendous amount of experience, and then you can start dabbling in the market. And by doing that, it will allow you to confidently decide when you're going to enter the market, and also when you're going to exit the market. And it's worked for me, and I know it can work for you. You can use this to add to your retirement plan if you're a middle-aged person like myself, or if you're a young person not quite sure what you want to do, while you're going to school, or maybe you're working that first couple of jobs that you've started out of high school. Trading is a lifelong pursuit, and it can make you a sustainable income, provided that you manage your emotions and treat it like a business. So if you like this video, please give it a thumbs up. You can subscribe to the channel. I've made a number of videos for beginning traders on this channel. Partly it helps me to reaffirm in my own mind to stick to my rules, but also I've got a couple of young kids that hopefully at some point in their life are going to want to learn how to trade as well. I know Dad does, and then they can refer back to these YouTube videos to self-teach themselves. I don't think YouTube's going anywhere, so great place to memorialize these lessons. Again, welcome to the channel. I hope you gained some value out of this video, and I'll see you on the next one.